Hey everybody, my name's Annie, and I'm here today to give you some information on ways to pay for your final expenses, specifically through life insurance. So, the first question is, why is life insurance important? Many people actually do agree that it is important, but just over 50% of the American population actually have it. So, first of all, I just want to talk about the main reasons that people have some form of life insurance. The main reason is to pay for final expenses and to also cover the loss of income in the event of a breadwinner's death. People also have life insurance to pay for their mortgage so that if they were to pass, their family won't have to sell their home or struggle to pay the mortgage when they pass. Additionally, parents often buy life insurance so that they can help their children pay for college and start their lives if they were to pass prematurely. So, it's a guarantee that everyone is going to die. The only question is, when is that going to happen? So you're guaranteed to have to use your life insurance at some point, and it is guaranteed to be there to help pay for your final expenses. Funerals are extremely expensive, and the cost of these funerals can be really overwhelming, which is why most people do need some extra help with those costs. Many people don't actually have 15 grand in the bank to be able to pay for a funeral, and the funeral homes require payment immediately, and often they won't even proceed with any preparations until they are paid in full because they have no form of collateral. So if people don't have life insurance or some money in savings or some way to pay the funeral, they might go into credit card debt or have to borrow money to pay for those expenses. So now that we've kind of talked about the need, let's talk about how it all works. So life insurance pays out a specific benefit amount upon your death, and it's a benefit amount that you choose, which is tailored specifically to your needs and the needs of your family. So what types of life insurance are there, and how do you figure out how much you need? So the most common types of life insurance are whole life and term life. Whole life insurance provides coverage for your entire life, and it builds cash and loan value as you pay your premiums. And the main purpose of whole life is to pay for your final expenses because it will be there for your entire life, whether you're 20 years old or 99 years old. Your premiums never ever increase, which is why it's really helpful to purchase when you're young because you lock in a low rate for the rest of your life. Term life insurance covers you for a limited period of time. It provides a large amount of coverage for a pretty low premium, and it's usually there to protect your income or your mortgage so your family won't have to change their lifestyles if you pass during your prime earning years. It is usually less expensive than whole life, but it does not build any cash or loan value. So throughout your life, your insurance needs change, especially with those milestones like marriage, children, and retirement. So this picture shows you what types of insurance you might need depending on where you're at in your life. So as you can see, whole life is needed from birth to death because there's always going to be costs associated with a death, no matter what the age. However, term life is typically only needed if you're married, own a home, have children, or any combination of those things. Because if you die, the loss of your income is going to negatively impact the people who depend on you. So then, after the kids are grown and the house is paid, and you don't really have any kind of debt or your children aren't dependent on your income, you don't really need that term anymore because your whole life is still there to pay for those final expenses when you pass. Alright guys, now that you have some information about why life insurance or some sort of final expense protection is important, and you know how it all works, let's look at the opposite end. Let's look at why people don't need it or don't want it. So they may not be interested, possibly because they might have another plan in place, such as a 401k or a savings account, and they don't want to take the risk of investing their money into insurance. Because it is a risk, if they were to ever to cancel, they would not get any money back except for any cash that they accrued on that whole life policy. But with a term life policy, they wouldn't get anything back. So also, some people just can't afford another bill every month. Insurance is expensive, and some people just can't really pay that. They have to take care of other things. Or they just think they're not going to die. At least not anytime soon. So why bother planning for final expenses when that's what seems like light years away for them? Unfortunately, though, even though we think we're going to live forever, or at least until we're old and gray, it's not the case for everyone. An accident or some unforeseen medical injury can take someone's life in the blink of an eye, and it can happen to anyone, anywhere, at any time. So this is why it's so urgent to plan for the future right now. There's really no time to waste. Whether it be through life insurance or a savings account, 401k, or even money under the mattress, it's essential to have a plan and to ensure that your loved ones are going to be protected from financial strain when you pass, whether it be today or 80 years from now. So protect your family today, find a plan, and take care of your responsibilities. Thanks, everybody. I hope you enjoyed this video, and I hope it helped you get some more information so that you can make an informed decision on how you want to plan for your future. And I hope you like and share this video.